Well, if you're looking to add gold to your portfolio, do you invest in gold, the ETF, or the metal itself? Or do you go for the gold mining stocks? Well, here to explain is Daniela Cambone, the editor-in-chief of Kitco News. So Daniela, gold is up 24% since the start of the year. But the gold mining stocks ETF, GDX, and we can show a chart of it, that's up 88% so far this year. So this may answer our question here, but perhaps I'm oversimplifying it a little bit.
Right. Well, it is impressive. Close to 89% are up. Incredible. But it really depends, what side of the fence you are on, and people are really passionate about this topic, and we can look at both arguments. So if we start at looking at the gold argument, I spoke with Chad Morganland over at Stifel yesterday, who said he wouldn't touch the miners. Why? Well, he looks at the balance sheet of miners. He says a lot of them are in debt. Some aren't, but many are. He also doesn't like the fact that he has to rely on the management of these mining companies, also the jurisdictions where they're mining, there could be a lot of risk. And he also says the reliability of cash flow to meet CapEx needs. He doesn't want to have to rely on that. And that's why he wouldn't touch the miners and really just likes the ETF.
And we should just point out that a few mining companies include Randgold Resources, Newmont Mining Corp. But for people who aren't necessarily watching their portfolios on a day-to-day basis, maybe the GLD ETF is a better bet, and we can show a chart of that as well.
And the chart really, is self-explanatory here. I mean, the GLD has been stable throughout the year, whereas, you see the volatility here on the GDX. So if you really want the best of both worlds, then perhaps you should look at the option of, having some GDX, being invested in the GDX, but hedging that with GLD or physical gold.
But it sounds like the bottom line is stick with an ETF.
Or physical gold, right? If you want to hedge against the risk of the GDX. In fact, one expert I was speaking to today said, why wouldn't I consider the GDX? Because it's basically trading as if gold is worth $500 an ounce. So it's a no-brainer for him. So that's kind of the flip side argument there. All
right, and then before we let you go, of course, we're in September. We have that big Fed meeting in a few weeks.
Yes.
What would a Fed rate hike do for gold in the short term?
Well, a lot of people that I've been speaking to feel that should there be a rate hike, there is an expectation there will be at least two in the next 18 months. So if we will have one, that maybe it's already been priced into the price of gold, so maybe we won't see that much volatility. If we do have a rate hike, maybe it's only 25 basis points, so it wouldn't affect gold that much. And others really think that September's off the table, that the Fed won't move before the election.
Right, and the probabilities for the Fed rate hike are much higher in December than September.
Yes.
So we'll be watching all of this.
Absolutely.
All right, Daniela Cambone from Kitco News, thank you for coming by.
Thank you, Scott.
I'm Scott Gamm, and you're watching The Street.